There's a lot of FUD in the crypto market at the moment. We've got Tether FUD, we have MicroStrategy FUD, we have China banning crypto FUD, and things seem really uncertain. Bitcoin price action is looking shaky, altcoin price action is looking shaky, and people don't know whether it's the end of a 4-year cycle and we're about to go into a longer bear market, or whether it's simply a temporary blip heading into what is likely going to be a positive liquidity year in 2026. The truth is, a lot of that stuff doesn't truly matter. And there's only really one or two things that matter right now. And we're going to get into those things in today's video so you can separate the signal from the noise. And I think by the end of today, you'll have a much better idea of what's happening in the market and actually what these FUD events end up meaning for the market. There's a historical pattern that I want to show you in today's video, which gives us a strong idea of what is going to happen next. So without further ado, let's get straight into the markets. Looking at Bitcoin firstly, I'll just touch on the price action quickly following on from yesterday. Still chopping in a range, not much to update. We have had a push to the upside after we saw the liquidation flush yesterday. Something to note is that we are coming up into resistance here at 88K. So any sort of reversal would need to flip this zone, consolidate above to look for a potential push up to the point of control on the H4, which is 95 to 96K. This is the next significant resistance for a relief bounce. Unfortunately though, we also have our range lows around the $80,000 to $82,000 level, which we may come and sweep if we aren't successful at a flip in this region. So I think it is going to be an important 24 to 48 hours in terms of Bitcoin price action. I'm watching this chart very closely. But at the end of the day, what is happening in the short term, these flips, these liquidity sweeps, this is all noise. 80K, 85K, 95K. It doesn't matter too much in the long-term scheme of things. What really matters is where we're heading and the true thing that's driving the market. And that is what we're going to be discussing in today's video so you can make better longer-term investment decisions. So the first thing that I wanted to touch on today, because I think it's important, yesterday we had the announcement that the Federal Reserve is officially ending quantitative tightening. We knew that this would come, and it marks the end of the tightening era that basically began in 2022. So you can see that the Fed's balance sheet over time tends to expand. It has been up and to the right, but you do have periods where we've seen extreme easing like we saw in 2020. Then we have cool-off periods like we have seen for the last couple of years, which is a tightening phase. Tightening coming to an end doesn't necessarily guarantee that we're going back into an easing environment. You can see many examples throughout history where we have flatlined on the Fed balance sheet in anticipation of a new easing cycle. So it doesn't mean it's going to happen straight away, but it is one of the conditions that you need to potentially pave the way for easing. But when that comes will depend on the shape of the economy and the other factors which are extremely important, which we are going to discuss in today's video. Overall, ending quantitative tightening removes a major mechanical liquidity headwind from the market overall, but markets remain structurally dependent on Fed balance sheet management. And that is the real thing that we need to start now shifting our attention towards. It's not just whether we're in a tightening cycle or an easing cycle. It's how the Fed is actually day to day, week to week, managing their balance sheet through the use of overnight markets, repo markets. That is something really important for liquidity right now. And it's one of the clues as to why we are seeing pressure on Bitcoin and risk assets alongside, of course, some of the big headlines that you are seeing, which in my opinion are a lot of the time just noise. And we're going to get into what happens historically later in the video when these headlines start to crop up. I've got it all mapped out on the charts for you. For Bitcoin and crypto specifically, when the liquidity regime shifts from negative, so quantitative tightening, to a neutral environment, this is a mild positive, but it's not technical QE yet until that is officially green lighted. So the way to think about it is, although it's not going to pump tons of liquidity into the market, it at least stops the prior headwind of getting in the way of expansion in other areas of the economy. So it doesn't work against you like it was before. Basically, imagine a current. Like we were swimming against the current for a couple of years. Obviously, price ran really aggressively due to broader macro liquidity conditions. But now you're not swimming against the current anymore. It's just flat water, but you're also not receiving current in your direction just yet. So now I wanted to highlight Ben Cowan's reaction to QT because I think this is interesting analysis. Coin Bureau said, is altcoin season going to start soon with QT ending tomorrow? Benjamin Cowan says, in 2019, QT ended on August 1st. Alt BTC pairs hit 0.25 approximately 1 month later. So he's referring to the altcoin price index versus Bitcoin, and how last time we saw QT ending, then we saw a quick flush down around a month later to 0.25 before we ended up expanding to the upside. Obviously, the anomaly here is that we did have QE kicking in, but it actually wasn't until 6 to 12 months later that we did see QE, and we still saw a bounce off the bottom even beforehand in anticipation of that. So the market typically does front run QE. He says 0.25 is a necessary but not sufficient condition for alt season. In 2019, once alt BTC pairs were at 0.25, Bitcoin was in a bear market. Alt season happened, but not for another 1.5 years. You could argue in 2019, the final capitulation occurred after QE began, as people who waited for QE were disappointed. That led to the final capitulation of alt BTC pairs, so a good chance the same thing happens again. QT ends, and then alt BTC pairs drop, despite people thinking they would rally immediately. Still think alt BTC pairs hit 0.25 before we see a rally to the upside potentially, but that will also be dictated by other things. And I just wanted to look at my own charts to see if there was any confluence in the things that I look at with the 0.25 level. And I did find that on the total 3 charts, this obviously excludes Bitcoin and Ethereum, there is a pretty key level at around the $780 billion level, which is a logical stopping point for total 3, so altcoins overall. So just keep your eye on this chart. I think there is a decent chance we sweep this zone. That would be coming slightly below the monthly low, back to the 2024 local high. That would likely correspond with this scenario here from Benjamin Cowan as well. So just a little bit of confluence there. But we know that this stuff doesn't matter as much as the drivers behind the market overall. QT ending isn't the main thing that's affecting markets right now. Whether altcoins hit a certain level or not isn't the main thing affecting markets. The FUD that we're seeing isn't the main thing affecting markets. What does actually affect markets? Well, you probably know by now, liquidity affects markets. So typically, over an extended period of time, Bitcoin has reacted extremely positively to increases in global liquidity. Now, M2 isn't the only way to track this, but it is one of the ways to track this. And it's a bit more nuanced than this, but we have seen a slight Bitcoin detachment, a decorrelation from the M2 liquidity index. So a lot of people are now saying, look, is Bitcoin broken? Is the cycle broken? Because typically Bitcoin should be following M2. Well, I've uncovered something which actually suggests something a lot bigger for markets, and we're going to get into that in just a few seconds and talk about why Bitcoin isn't reacting to M2 and what it spells for markets. But quickly, I just wanted to pick the 5 winners of yesterday's giveaway. I said that if you have notifications turned on for the channel and you comment Noti Gang, I'm going to pick 5 people to win $100. So if you commented yesterday, watch now to see if you're picked, and then email the email that I'm about to show you. All right, starting firstly with Darko, you should send an email. You're going to win $100. Scrolling down to Jacob, you can win $100 as well. I'm just trying to go randomly here and give the people at the bottom of the comments some love. All right, Louis, you as well. You win $100. Callum, you win $100. I'm going to go down, give the people, the OGs that commented early on the video some love to make sure that we are supporting everyone. And, okay, Luca, you can win $100 as well. So if I mentioned your name, email this email in front of you, giveaways.marsdeutscher@protonmail.com. I want you to email and say, I am a winner. Send a screenshot that you have notifications turned on for the channel, and we are going to verify that you own that account. So don't try and fool the system, because we will be sending you a link which validates your YouTube account. Obviously, just make sure that you use this exact email. This is the only email where you will be interacting with my team directly to win the giveaway. If you didn't win the giveaway, even if you commented yesterday and you want to have another go, all you need to do is turn on notifications for the channel and comment Noti Gang below in today's video. And in tomorrow's video, I'm going to pick another 5 people to win $100. So if you're new, you can take part. If you didn't win yesterday, you can enter again. Keep entering until you win. We're going to be doing this daily. And remember, you have to watch the next video to see if you won. So good luck. And now let's get into what is actually happening, because Bitcoin has followed M2 for a long time, but recently it started to trail off. Now, there are a few reasons why Bitcoin has been tailing off. Partly because we've seen some structural selling, partly because in order for it to catch up, it would have need to significantly outpace its normal growth rates. I mean, it's not realistic for Bitcoin to hit 200K to keep up, but if it was doing something like this, I think people would understand it a bit more than the stark drop-off that we've seen, which has obviously been triggered by MicroStrategy and has been triggered by some of the structural selling, the OG whales selling, and the ETF demand drying up. All the reasons we've spoken about in the videos over the last few weeks. But I think the main question is Is there going to be some sort of catch up here? Or is this just a new trend where they've just decoupled forever or decoupled for a couple of years? Well, the first interesting observation that I think we need to look at, and this is a really, really big observation by Willy Woo, is the fact that often Bitcoin actually leads M2. So markets are efficient, markets are smart, and they know that liquidity expansions are going to happen often before they happen, just based on projection. So the price of Bitcoin will increase in anticipation of a liquidity increase. So we've actually seen the last 3 peaks on Bitcoin lead the peaks on M2. Willie actually points out something interesting. But Fed rates are dropping, i.e. more money printing, leading you to think that global M2 should climb. But if global investors buy USD instead of buying risk on assets, also called a flight to safety, then USD strengthens and global M2, which is priced in USD, actually drops. So if there is a flight to safety, and we are seeing the signs of equities also being a little bit exhausted and some of the overvaluation concerns coming into the market, then you could actually see M2 dropping, because even though technically the money supply is expanding, because the money supply is obviously priced in USD, if there's a flight to safety event, which we're already seeing a little bit at the moment, but it could potentially get bigger, then you'll actually see M2 going down and Bitcoin peaks, because it's an aggressive risk on signal in the market, typically lead risk off troughs, which happen after a significant expansion event for risk assets. So this is an interesting trend. But we do know that over time, M2 is up and to the right, and Bitcoin over time thus should be up and to the right as well. It means that Bitcoin potentially has already put in the majority of its downside before you might see the same on the M2 index. Liquidity, expansion, and M2 going up are not one-to-one, because it also depends on where people are putting their money. If the money supply is increasing, but people are putting their money into risk assets, then yes, you'll see M2 spiking up in terms of the index. The reality is, and this is what a lot of people miss when it comes to Bitcoin and liquidity. People know there's a correlation between Bitcoin and liquidity, but what they need to understand is that it trades on market liquidity, not just M2 in isolation. So Bitcoin, because it's extremely reflexive to liquidity, moves with marginal liquidity indicators in the shorter term as well. For example, reverse repo, the Treasury General Account, the Fed balance sheet flows, where money is going. For example, we saw the government shutdown also correspond with Bitcoin dropping substantially because flows ground to a halt, which stopped active liquidity going into assets like Bitcoin and equities as well, which coincidentally around the same time also started to cool off. The USD liquidity index and futures funding leverage conditions are also important components of market liquidity. So M2 overall is a trend that you need to pay attention to in terms of it going up and to the right. And that is the trend we're seeing, and that is the trend that should likely see Bitcoin continue to hit new highs over a multi-year time horizon. But when people say, oh, we're so confused why it's decorrelating, does this mean the cycle's broken? Does this mean the Bitcoin liquidity cycle's over? Well, no, because in the short term, there can be periods where things go astray if these factors that impact market liquidity are not aligned with the market. And what we've been seeing at the moment is, even though technically M2 is going up, global central banks have slowed down balance sheet expansion. So the Bank of Japan, the ECB, the PBOC are not adding strong net liquidity. We obviously saw the US government shut down, resulting in them not adding strong net liquidity. The Fed's only just ending QT. It's not actually expanding yet. So we haven't hit a phase of liquidity expansion. So we're seeing an environment right now from a macro perspective where liquidity is in its stabilization phase, not in its re-inflation phase. And Bitcoin ultimately needs new liquidity to break its trend. The other thing that is happening, of course, is that there are specific Bitcoin factors like the leverage unwinding, like the MicroStrategy potential unwind. I'm saying potential because you can't take these things on face value, but that has been a rumor that's affected the market, whale selling, etc., which has started to impact as well. So although M2 is rising on face value, it's the wrong kind of liquidity to track for Bitcoin. Overall, there is a correlation, but if you want a micro correlation over shorter term timeframes, you need to look at this other stuff. And if you start looking at the other stuff, there's no surprise that the market is looking so weak at the moment. You can see the SOFR, which is the overnight financing rate, is now 12 bips above the Fed's upper bound. This indicates that there's an ongoing liquidity crunch in the overnight repo market. This is actually something that typically happens at the end of each quarter. We saw it happen at the end of September, which also caused volatility across markets. What does it mean for us as investors? Well, essentially what it can do is jack up short-term borrowing costs, which has the potential to push treasury yields higher. And this could ripple into fixed income, which if it goes unchecked, this could cause additional volatility in the equities market and risk on assets, which could more broadly rattle investor confidence. So to sum it all up, even though rates are coming down, even though M2 is on the rise overall, in the shorter term, there is a bit of a liquidity crunch at the moment, which is putting pressure on markets. Now, this is likely to be alleviated in the new year, but expect a continued shaky end to the year because of this, heading into also what is typically a lower volume period over the holidays. So that is one piece of the puzzle. I really wanted you to get a good understanding of what's happening at the moment. But I guess your question is, then what happens next? Well, to understand what happens next, we have to look at the headlines which are suppressing the market at the moment, and also look at how some of these headlines have resolved in the past and see if there are any correlations. Spoiler alert, there are extremely strong correlations, and we're going to go through them right now. So what is the current FUD in the market? The first bit of FUD is that China is going to be banning crypto again. Now, we know that China has been saying this in various shapes and forms pretty much since 2013. In 2013, they had a warning. 2017, they had a warning. 2019, they had a crackdown. 2021, they had a mining ban. 2023, they had a ban. And in 2025, they have an anti-crypto warning. This happens time and time again. So what I did was I took all of these events and I tracked them on the chart because I wanted to see, okay, when China cracks down on crypto, does this impact liquidity flowing into the crypto market? And what I actually saw is that pretty much every single time they crack down, you can see the dates corresponded on the chart here, there's typically a short-term bottom, which is crazy. Or there's a tiny dip and then it leads to aggressive expansion in the weeks and months after. 2017, we saw a slight blip. It marked a bottom and then we saw aggressive expansion. 2019, we saw a bottom and then we saw expansion. 2021, this was actually mid-year and this was, I think, the last leg down for the market before we saw a significant expansion. In 2023, it was literally the local bottom before a big pump, and once again, we're getting it in 2025. It just seems like every time the market is bottoming, we see these headlines. But I don't want to just base my entire trading thesis on China, so let's move on to some of the other FUD events in the market. All right, Tether. Arthur Hayes came out against Tether. I did a video breaking it down yesterday. The TLDR is there are risks for Tether, but I think it's overblown in the short term, and I don't think it is likely to materially impact the market, but it's something to be aware of. However, once again, looking at the chart, Tether FUD typically also marks local bottoms. You can see the Bitfinex hack, the Tether DPEG in 2018, the NYAG case, the DPEG again in 2022, 2023, and the latest no audit FUD all resulted in local bottoms. And it's not like they're like in the middle of downtrends. They are literally bottoms. I mean, at least within like a 3-month period, because this is on the monthly chart. Monthly bottom, monthly bottom, monthly bottom, well, we don't know yet, but you got to see where I'm going with this. We have 2 data sets now that suggest the market typically bottoms on FUD. What's the other big piece of FUD? And you probably get where I'm going with this, and I'm going to tell you what the smart money's doing. What's the other big bit of FUD at the moment? Well, it's MicroStrategy. Now, we should probably unpack this further in a future video because there's a lot to talk about. Fabian did a great post in the Discord on this the other day. He pretty much said, from a behavioral perspective, Saylor opened the door to both MicroStrategy and Bitcoin sales today in a move that signaled a bit of panic to markets, obviously resulting in this becoming a big narrative and putting pressure on Bitcoin price. MicroStrategy price is down 12% since, and I'm not sure how they can regain investor confidence in the short term. So MicroStrategy will likely continue to be an overhang for BTC that gets tested over time. I'm not sure what that path looks like, but it probably doesn't happen in a straight line. And so for now, I am still looking at the 75 to 80K range of Bitcoin. I'm going to chart it later because there is a big support level also on the chart that I want to show you to establish a range and 100K resistance for now, as long as MicroStrategy MNAVs don't fall too far too fast, which I'm keeping a close eye on. So obviously we need to monitor the situation. I think that is a good read on the situation. There is no immediate concern, but I think the best way to summarize it is that it does put an overhang in the market overall. It's just a headwind that not only limits confidence, but also strips away that buying demand that we had when they were positive MNAV because they were buying so much, which was propping markets up. So that trade has largely unwinded now. So that is the summary for now. Prediction market odds are saying there's around a 30% chance that MicroStrategy sell by next June. Michael Saylor has been adamant so far that they're not selling Bitcoin. Obviously, if there was too much pressure on the stock price, they may have to consider it unless they were able to refinance. Tommy, who I respect in the space, is the founding partner of Delphi Ventures and co-founder of Delphi Digital, said that strategy is not a forced seller of Bitcoin and has 21 months to recover debt payments. 12.7K is a fake number. Their debt is primarily unsecured convertible notes with no forced liquidation triggers based on Bitcoin's price. I could be wrong and we can go lower, but it feels overblown. I just bought another Bitcoin at 85.5K, not financial advice. And if you look, like we did with the other examples of the current FUD in the market, at what happens whenever there's severe MicroStrategy FUD, well, you guessed it, typically it marks a local bottom. Now, there was one time where it didn't, and that was in 2015. This was on the delisting and leverage FUD. But 2021, local bottom. 2022, local bottom. 2023, this was one of the lowest prices that we saw pretty much of the last few years. And then 2025 as well. Technically, we're hovering around similar levels, but there was a dip that happened afterwards, albeit likely not triggered by MicroStrategy. This FUD seems a lot more aggressive, to be honest. I didn't really hear that much last year about MicroStrategy. Now I'm hearing a lot of it. I mean, you probably noticed this as well. If you're on X, if you scroll through your feed, it's all anyone is really talking about at the moment. So when the FUD typically reaches a fever pitch, oftentimes it marks bottoms on the chart. And we saw that with the other FUD events as well. So what's my takeaway from this? My takeaway is that you should ignore the headlines. The headlines are just there to spook you. And similarly, conversely, in the bullish times in the market, the headlines are there to make you bullish so people can get their exit liquidity. So it goes both ways. You can't play too much into the negative headlines or the positive headlines. You have to remain nimble as an investor. You have to remain agile and strategic as an investor and track things. Just because there's a bit of MicroStrategy FUD doesn't mean it's all over for MicroStrategy, nor does it mean that it's completely baseless. There's always a middle ground. You have to assign the percentage likelihood that you think the trade is priced into the market or priced out of the market. I personally think, given how we've seen these events play out historically, how they typically do end up marking local bottoms, although we can't time the local bottom exactly, there's a pretty solid chance we are in a bottoming formation here, in my opinion, given the fact that there's a clear historical pattern here, alongside the fact, as I mentioned earlier in the video, and this is really important, we have seen short-term headwinds coming out of shorter-term liquidity tightening, which is currently putting a lot of pressure on markets. For example, the SOFR is putting a lot of pressure on markets in the shorter term. The US government shut down as well, and the fact that there's not a huge expansion globally yet. This can happen. In fact, I do think it will happen next year, and the market should start front-running this, but it's not happening just yet. There's just a little bit more pain first, in my opinion. But the smart money is already starting to take advantage. That's why even Jordy, who I really respect in the space, said that it might be time for Selene Capital to start a proper collection for the balance sheet. He said relative to gold stocks, we are in clear value territory, so either we're going to zero or way up. I do think this is a decision you have to make. Like, if you want to follow the gold trend, if you want to follow the liquidity trend longer term, then it should indicate higher prices for Bitcoin, or there's something really structurally broken with Bitcoin and MicroStrategy is going to unravel and we go way lower. I do side with Jordy here on the fact that I don't think there's that much of a middle ground. I don't believe we're in the traditional 4-year cycle because Bitcoin has never really followed an arbitrary 4-year cycle. It has always, year after year after year, followed global liquidity, and that has basically dictated the entire cycle for Bitcoin. And I don't think this will be any different. I made a joke, Saylor marks the top, buying Bitcoin, and Selene marks the bottom, buying Bitcoin. We also saw Vanguard starting to step in, now allowing clients to buy crypto ETFs starting tomorrow. So this is another big player that's traditionally been against crypto, now stepping into the space. So there are some positive signs that some of the smarter money in the market is starting to shift their mindset a little bit. Tommy, as I mentioned before as well, he's also accumulating Bitcoin. So I'm noticing a pattern. I'm noticing a pattern of smart money starting to get really interested in buying. I'm not calling myself smart money, but I've also been buying throughout this period slowly. And I'm noticing people on X, random people, random retail, freaking out and panicking about MicroStrategy and Tether FUD. So put 2 and 2 together there. Also, I thought it was worth noting today that the ETF flows have started to stabilize. So retail aren't really panicking either. They were panicking a couple of weeks ago, but it's actually ticked back into net positive. So people clearly do think that this is a value zone for Bitcoin. And I think that's why price is just, chopping. If you want to condense it down, you can see it's mostly just stagnating in this range as it finds its value zone. We also saw that whales stepped in quite aggressively. In the low 80s, around 84K, we saw the first extremely strong red square on the heat map here on glass mode, which indicates that a strong cost basis cluster formed, showing fresh accumulation at these levels. And it's actually the densest on the heat map, likely to act as a pretty strong support area. If you want to map that on the Bitcoin chart, it's in this area here, in the 82 to 83K area, where Moran also thought if we did get a bounce there, this would be worth a long. So that's my analysis on Bitcoin and markets. Remember, things are often darkest before dawn, and the headlines are actually often worth counter trading as opposed to reading into them and getting scared and getting bearish. I think the smart people in the market now are understanding that this period, it might not be today or tomorrow exactly, but this general period probably marks a massive, massive opportunity. If you're still a believer in crypto like I am, I think you're going to see some pretty good buys from these levels. And that's something that we'll unpack on future shows. But I wanted to lay the land here and really show you the dynamics affecting the market today in order for you to be prepared for those shows later in the week. Remember, if you turn notifications on, do it right now if you haven't already, and just comment Noti Gang, and you will be in the running to also win $100 on tomorrow's show. Make sure you watch tomorrow to see if you won. I'll see you in the next one. Have a lovely rest of your day. Peace out.